All right, shorting at the low of the inversion fair value gap. I'm expecting majority of this fair value gap to stay open, so my stop loss, I want it to be above the high of that, which comes in at 670.5. We'll do that. So if we trade into this fair value gap here, I'm watching to see, do we stay in the lower half? But ideally, I want to see that stay open and then see this fair value gap here be used as resistance. Risk comes off if we trade to the new day opening gap down here, or new week opening gap. I think it's a new week opening gap. My target, first presented fair value gap, which is your 932 candle. Not interested in taking any partials here unless I do something like this and we'll take off like 4. Something like that. Risk comes off here. So I'm watching every buy side imbalance, sell side inefficiency, and I'm watching to see if we can use that as an inversion level. So on the buy side of this curve here, we have this fair value gap. I want to see that be used as resistance. Keep looking left. We have this fair value gap here. I like to see us use that as resistance. So any discount PD array on the buy side of the curve here, if I'm confident that we're in a sell program, I like to see that be used as resistance. We're going to take some of this off just to clean up the chart a little bit. So right there, so far we open, traded up to this fair value gap. Now do we use that as resistance to take us into the new week opening gap down here? And if we do that, then my stop loss would get moved to break even. And then I'll take 80% of my position off at a first presented fair value gap for this morning that we never traded to. And I may leave my last runner on for that daily sell side down here, best case scenario exit. Gonna trim my risk a little bit. That initial fair value gap that I'm trading as a breakaway gap, midpoint is there. Gonna trim that just a little, because again, I'm not expecting us to revisit the upper half of that. We likely have a fair value gap on like a 2-minute chart right there. But if that stays open, then it goes without saying that we're pretty heavy. Coming back to equilibrium between that low, that high. Midpoint comes in here, just tagged it. So risk is removed. And just like that, it is a risk-free trade. Inversion fair value gap. Does it send us lower into the new week opening gap? Absolutely. That's nice. You could take a little partial there if you want. New week opening gaps, new day opening gaps are great for partials, but in my opinion, that's not enough range for profit taking, so I'm not really interested in scaling something off there. I think we traded into that 2-minute fair value gap. Yep, right there. So same logic applies to a 2-minute chart, right? That first fair value gap, you want to see that be treated as a breakaway gap. Which fair value gap do you want to take you lower? This lower one here. So on the 1-minute chart, you don't really see any clean 1-minute fair value gaps. But Tremaine, when do you jump, when do you look at a 2-minute chart or 3-minute chart? Well, if the 1-minute is just these small bodied candles not really showing us much, then in that instance, jump to a 2-minute chart. Your breakaway gap and the fair value gap, that should offer resistance. And my stop loss was just above that, so that's nice. New week opening gaps and new day opening gaps are great for partials, and we know that those are key reversal points. Like this is an old new week opening gap down here. You can see the bodies respecting midpoint, the bodies respecting the high, and then we reverse. So I kind of like moving my stop to break even whenever we tag these levels, because especially the market conditions that we're in, where price is rangy on the daily chart and we're not really likely to have strong trending days, we like to pull back into the range. If we ever tag levels like that, I like scaling out my risk because we can see something like this here. And I think my stop, let me see, is 37.75. So my stop is just above the high of the fair value gap of the 2-minute chart. I'm including that little volume imbalance. So this is that 2-minute SIBI. My stop loss is just above that. But we're not expecting this fair value gap to be traded to, so I'm watching to see if we get any sort of speed displacement underneath that short-term low that was just formed. That's a signature that I like to look for. And we'll go ahead and keep that 2-minute fair value gap on. And we'll just label it 2-minute SIBI. And then we'll take off our, alright, we'll go back to a 1-minute chart. Okay, never mind. We'll just keep that off. You get the point though. I'm not even gonna play with it, to be honest. These market conditions are not the time to get cute and try to hold for long moves. All right, so we traded underneath that low, and I want to see a signature that I look for whenever I'm in a short. Do we get speed underneath that low? I don't want to just see a little wick, and then we retrace all the way to the opening price of this candle or the inversion fair value gap. I want to see, do we get a nice, strong, energetic candle, either on this one or the next one, and do we get a nice close underneath that low? And my thought process behind the short is, where did we open at 9:30? We open on this candle here, and what do? Trade it higher, 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 higher. What's everybody going to do with that? They're going to be enticed to chase it going higher. We outlined that 5-minute and 15-minute mitigation block. Okay, smart money offloads their position that was offside. breakaway gap, inversion fair value gap short, and now we're running against everybody who chased it at the opening bell. We're running over the top of that. So earlier in the stream, I said I don't really want to be part of the group that chases it. I rather look for a setup, fading all of that opening bell Judah swing. 9:30 to 10 a.m., that's when you often find a Judah swing. And then we outline the daily sell side in our top-down analysis is my potential draw for the day. Yes, I am on paper. I'm on paper. I'm done on my live account. I made my 1,000 for the week on the live account, so we're done on that. But we're just trading paper for educational purposes and whatnot. So we're beneath the new week opening gap. Same thing like any PD array. Do we respect the lower half of it? So we open, trade it up. I'm watching, do we stay beneath midpoint of that new week opening gap? Do we respect it? Last line of defense for lower prices for me is this wick and this midpoint. You have a small little SIBI, but I prefer to see that stay open, have that not traded to. Midpoint of that wick is what I'm watching. That's kind of like anything above that for me, and the trade is kind of questionable. Unwilling to get through that. There's the break even. I'm watching this up close candle here. This potential bearish order block. I want to see if we have any respect of that. And then it's the same logic, the low of it to the opening price. I want to see if we use that to take us lower. And then again, this fair value gap, I like to see that be used as an inversion level. All right, I'm short here at the low of the inversion fair value gap. Kind of looking for the same thing that I was looking for on my first attempt. Taking the entire range of this up close candle, splitting it in half, getting mean threshold of it. First trade was a break even, and then my last attempt for the day. Risk comes off. Excuse me. Risk comes off if we can accelerate underneath that short-term low here. This is when I want to see just really aggressiveness, like fast, energetic candles taking out that low. If I get that, then I'm real confident that I'm on the right side of the marketplace. If we disrespect this up close candle, then we'll just call it a day. I still think these clean lows down here are too smooth. I don't like that small little trading beneath it by a little tick. I don't really like that. Right now, I'm still watching this up close candle, and I'm still having my finger on the manual close button. I'm taking off risk here. I don't care about it. The fact that Nasdaq's being a little stubborn, wanting to take out the lows, it can knock me out of break even. Really doesn't make me no different, but I need to see a lot of speed underneath that low, and right now it's just not giving it to me. The high of this fair value gap comes in at 34.50. Take 3 off there. My original draw on this short was the first presented fair value gap, so that's going to be my terminus. I'll take 1 off at the new week opening gap, should we trade down there, obviously. And then my terminus target is the first presented fair value gap. Risk is removed, so best case scenario, our partial gets hit along with the rest of our targets. Worst case scenario, it's a break even day. And there we go, out at break even. We're done. Long day. Let's cancel these. Break even day, short here. I mean, there was range for profit taking. This short gave you up to 60 handles. This short here gave you up to 70 handles. I just wanted my target, so nice little price moves here and here. But that is it. $10 on paper. Go ahead and clear that off. and we're back at it tomorrow. So good stream. TPs didn't get hit, but we learned a lot. So I'm gonna call it a day. I won't be looking at the charts anymore for the remainder of the day. Hopefully y'all had a good trading day. Some of y'all may have been a little bit stressed and sweaty palm or whatnot, but it's all good. It's just price action. I'll see y'all tomorrow at same time, 9:30. Peace.